Welcome. We're taking a look now at some small cap stock picks with Dr. David Paul from Vectorvest with 4 stocks to watch today. David, good to talk to you again.
Good to be here, Jeremy.
Now, you've been here before. Just very briefly tell us about Vectorvest.
Well, Vectorvest is the only stock market analysis tool in the world that integrates 3 aspects of market action. One, we look at the fundamentals of every share in the London stock market and an AIM. We look at the technical position of every stock on the London stock market and AIM, and then we look at the technical position of the overall market. And when I can tick those 3 boxes and find the very, very best shares with the best fundamentals that are rising when the general market is rising, then I can predict the future with an accuracy that's quite strange in this line of work.
Yeah, and I think one of the things that comes out of your dashboard, if you like, that you put together is the market timing index that you put together. I think you've sent across a copy now.
Yeah, quite so.
Just explain a little bit more about what's going on here.
Well, this is the Vectorvest composite. It's not the FTSE 100, the FTSE 350. It's all of the shares that we follow on the London stock market on AIM. So that's 2,300 shares on an equally weighted basis, and it's our philosophy that an equally weighted basis represents the sentiment of the market much better than a market cap weighted index. I put it up there since the start of 2016. Now, you can probably see the red and the green triangles, and those mark our longest term measure of the trend. So as you can see, we got a sell signal on the first trading day of January 2016. Market sold off aggressively, if you remember, into the middle of February. Yellen was going to put rates up 3 times, if you remember, last year, and then she reversed on that. We got a buy signal in the middle of February, and that buy signal was current right into November. We had that pullback in November, and since December the 12th, the London stock market has been in a up call, or what we call a confirmed call has been up. Now, we actually have 5 market timing systems, Jeremy, for long-term systems such as the one that I've illustrated for longer term traders, buy and hold type traders, and we go right down to a short term trend, which is for swing traders, people who want to be in the market for a couple of days. In fact, in any intraday trading that I do, I actually define the trend of the market by what we call the primary wave, which is the short-term trend. As we go into the trading day today, the short-term trend is up and the longer-term trend is up, and the market looks very strong.
Yeah, okay. You brought along 4 stocks, for which I think these are all long trades, aren't they, the 4 stocks you brought along?
These are all long trades, yes, and they are shares that we believe are fundamentally sound, that are trading below their valuation, that are trending up the page, okay? And the general market is trending up the page. I'm very much a tick the boxes trader, so when I can tick all 3 boxes, then I can make money reasonably easily.
Okay, let's start off if we can, and we go first of all with pharma company, Beximco.
Beximco,
now I know
yes.
nothing about this company, but you tell me it's Bangladeshi based, is it, or London listed?
It's Bangladeshi based, and they've recently had 2 of their drugs approved by the American FDA, which has given them a shot in the arm. As you can see from the chart, they're trending up the page, and your moving averages define the trend quite nicely. We believe that the share, it's trading at 66p. We believe the share is worth 89 pence, but on top of that, we have a measure called earnings potential over a window of 3 years into the future. And on a scale between 0 and 2, Vectorvest rates the earnings potential at 1.41, which means that we believe the share will outperform the risk-free rate by 41% over a window of 3 years into the future. So the share, we believe, is undervalued now, and that over a window of 3 years into the future, it's got significant upside. It's pulled back a little bit in the last couple of days, and it's pulled back to support. On Vectorvest, it's still on a buy recommendation, and it looks to me as if it's pulled back into quite a nice level to get aboard. It's a small company based offshore, so there is risk, that's for sure. And our relative safety is less than 1 on a scale between 0 and 2, which is hardly surprising for a company of this nature. For those people that have got a stomach and can manage risk proactively, it looks like a quality pick.
And you, this heavy line I've drawn at the top here is the 89 pence level, which you feel happy with.
Yes, that's right. Yes, that's where we believe it's valued at the moment.
Okay, let's move on to another stock, Morgan Sindall Group. Now I know a little bit more about this company, a building company. Well, now this is an interesting stock because I mean this has been tremendously bid in the last couple of weeks or so. It's gone up from £8 beginning of February. Here we are now at £12.43.
Well, we believe it's worth, at the moment, £17.10. Wow. So we believe that there's still significant upside to that share. Although it's run very fast, I was hoping that it wouldn't actually move before I got here, to tell you the truth. Yeah. But I called it on our blog over the last few days at vectorvest.co.uk. I think it looks a little bit quite overbought in the short term, and it probably needs to come back towards your moving averages before we can look at it again. But certainly there's still a lot of upside, and in terms of our earnings potential in that share, the earnings potential on a scale between 0 and 2 is 1.57, which is much better than excellent. It's really, as I say at some of the seminars, bloody marvellous. It's better than excellent. So on that particular share, our measure of safety, relative safety, is quite high. So this is a much more conservative pick than the pharmaceutical company that we just talked about. Okay, so at 1.27, it's got a history of making money and growing all the financial ratios that the fundamental analysts measure fairly safely over a picture of 5 or 6 years in the past. So. Looks good to me. Okay, just quickly go back to the chart just to reiterate this with David's target there of over £17 a share. Here we are at 12.43, looking to buy the dips, going back to these moving averages here. So Morgan Sindall, interesting stock to watch. Let's take a look at Defenx if we can, because I think in the context of the ransomware issues that were out back end of last week, this is an issue which has affected pretty much every single technology company, isn't it, last Friday? That's correct. The unprecedented hit on the National Health Service, and it was all over the press all weekend, has given a shot in the arm to all the antivirus companies yesterday. This little company manufactures, or is in the mobile area of mobile security and mobile devices, and mobile is growing hand over fist. So it's trading at 152. We believe it's worth 196. The earnings potential over a window of 3 years into the future is 1.33 on a scale between 0 and 2, which is good. But again, on this share, the relative safety is low, so it hasn't got a proven track record of making money in the same way that Morgan Sindall has. So, but for those people that are happy to manage risk and manage their position sizes carefully, it looks like an opportunity for a reasonably quick profit here. It's gone quite a long way, and it certainly could pull back to that last old top and let your moving averages catch up with it. So I think that it's broken through that high, as you can see, has nearly broken through that high, but it could easily pull back to that last old top and let your moving averages catch up with it somewhere down around there. So again, something to watch, but I think a very, very exciting prospect for a share that can actually increase its share price enormously in a window of 3 to 5 years. Yeah. Okay. Let's look at a company that perhaps maybe some might because it's a bit more traditional, Victoria, which is, I believe, a carpet manufacturer. Yes, that's the biggest manufacturer of carpets in the UK and in Australia, and growing very strongly. It's had a couple of splits since I've owned it, and it's moved up the page quite nicely. We believe that the share is worth £7.29. It's trading at £5.37. So it's undervalued at the minute, and the earnings potential is 1.49, which again means that over a window of 3 years into the future, we believe that this share will in fact outperform the risk-free rate by 49%. Our measure of the risk-free rate is a AAA rated corporate bond. Okay, and at the moment it's pulling back, and it's pulling back in a very tight range, and that's a good sign. That's what a technician called Thomas Bulkowski, who's written a book called The Encyclopedia of Chart Patterns, he would get very excited if he saw that, because invariably that little tight flag breaks up the page quite strongly. So I think that soon there is another high momentum move just about to happen in Victoria. The previous move was probably easier in that I love my cup and handles. I don't know if you, and there's a beautiful textbook cup and handle just over the last few months where you see the lovely little cup and then the handle, absolutely textbook, made famous by a chap called William O'Neill in a book called How to Make Money in Stocks about 25 or 30 years ago. Cracking book. So undervalued, growing its earnings aggressively, and the general market is rising and it's rising. It's just now a matter of letting it break up the page. Let that little flag break up the page, and I think that there's probably quite a nice profit in that. So one to keep your eye on every single day, I think.
Yeah, okay, all right. Look, those four stocks, just a general comment on small cap stocks. We've seen recently some of these AIM stocks, they get taken over. Here we've got a technology company, a couple of traditional companies, a biotech company. Is there a history of these sort of businesses being taken over?
Yes, I think that the pharmaceutical company could easily be a target, that's for sure. I don't think that the corporate company, the individual running that, is intent on building an empire, and he's starting to grow. He's got virtually no sales at all in the US, and he's looking for acquisitions fairly aggressively and proactively in the US, so that I think that Victoria is going to be a big, big story over the next few years.
Yeah, okay, look, it's always interesting to get up to speed with you. Thanks indeed for joining us from Vectorvest.
It's been great, thank you.
Dr. David Paul from Vectorvest with his 4 stocks to watch.